Nicholas Merten is the creator of Data Dash, one of the biggest cryptocurrency channels on YouTube with 483,000 subscribers. He is also the CEO and founder of Digifox, a cryptocurrency startup that lets you get a portion of your salary in Bitcoin, Ethereum, or Litecoin. Nicholas, welcome to Letters from a Contrarian.
Eugene, thanks for having me, man. It's much appreciated.
So just to get started, how and why did you start Data Dash, and how old are you?
Yeah, so for my age and stuff, at the moment I'm 23. I'll be turning 24 in early of next year. But generally speaking, I went down this whole rabbit hole way before even creating the channel about learning about the traditional financial system. It was back in 2011, and I'll be completely candid, I had no passions at that time in my life. I was generally kind of a gamer. I would kind of kill time, had a lot of great friends and family members I was very thankful for. But I, lo and behold, got recommended from one of my teachers in school who saw that I was quite engaged actually in talking about civics and economics, basically about general politics and economics. And he said, Nick, you know what you should do? You should watch the debate tonight. There was a Republican debate for the 2012 election. And I remember I was sitting down, I was watching all the major speakers come up. They were talking about national foreign policy. And just down the list, everyone said what I had already kind of thought in this case about, wars abroad and everything. Something completely separate from crypto. And lo and behold, I had Ron Paul come to the stage. And he gave a completely contrarian opinion, more of the libertarian take. And it completely set off a dopamine rush in my head. I was like, what is this? I need to look further into this. And I got really entrenched in learning about geopolitics, finance, how the whole world works. So that led me down the rabbit hole, of course, learning about the banking system, learning about finance. And lo and behold, after years and years of learning about the financial system, I grew more entrenched in financial investing and prepping myself for a world where central banks are kind of out of control with money printing and monetary policy. Funny enough, I actually heard about Bitcoin back in 2011, very soon after I started my journey. There was a video on YouTube called What is Bitcoin? It was a cute little animated video. It's got millions of views by now, but at the time only had a couple thousand. And when I first listened to it, and I was eager for a solution, I was highly skeptical. I had been in a really cynical mindset at the time that, the system is not going to be fixed. This is going to repeat time and time again. We were making the same mistakes as before. And I didn't really get what blockchain or crypto was. But from then on out, years later, I kind of watched the market as a trader. And as Bitcoin had revisited its previous all-time highs in 2016, I knew I had to look into it. So I read the white paper, I dug into it, and I just absolutely got consumed. I fell down the rabbit hole like Alice did, and I wanted to continue learning more about crypto. So I ended up, ironically enough, creating a channel that wasn't meant for crypto. That's why it's called Data Dash. And I was originally mainly focused on data analytics, which was the career focus I was going to go into. And after creating one or two videos that got a couple hundred views, I realized I had to stick at it. Like something was going on here. I'd used YouTube as far back as 2007. And from there on out, just kept creating content, and we grew to having one of the largest YouTube channels for crypto to date. So I've been very blessed. The time has flown by, and I'm absolutely fascinated by what's going on in crypto just as much as I was back when I started.
Awesome. And at what point did you decide that you wanted to take that further and start Digifox, your own company?
Yeah, I think one of the things that was really awesome to experience having a YouTube channel is that you get this insight into hundreds of different projects and companies, by reviewing products, doing interviews with CEOs and founders. And the thing that I saw is, and this is also a common trait we see with other YouTubers, not just in crypto, is that after going through all that experience, you're like, you know what, I think there's a solution that's still not in the market to fix a lot of the existing problems that it's just kind of seen as normal, commonplace today. But as a content creator, you get to see those things, right? So I basically not only saw a lot of issues within the cryptocurrency space that need to be solved, but I also saw a lot of major issues in the broader financial world that are still existing today. I kind of calculated that we're roughly experiencing about $1 trillion each year annually of inefficiencies in the financial system that I think not only crypto could be a solution for, but we could continue to better improve crypto in order to scale out and alleviate a lot of those inefficiencies, improve the quality of life for a lot of people, and really build a better world. So for me, that was the biggest thing, is just taking a lot of the existing issues in crypto, making it much more simpler, and that's why we're launching Get Paid in Crypto soon. And then after that, going on to build other things building out a variety of services that are going to continue to kind of edge away at all the inefficiencies in the existing financial system.
Gotcha. How has banking failed, do you think? What issues do you think it has? Could you go into more detail about these inefficiencies?
Yeah, there's generally two, I'd say actually three major inefficiencies that kind of cloud my mind. They're the kind of things that keep me up at night. The first one is the discrepancy between what a bank makes and what depositors make when they deposit money in their savings accounts. So the average savings rate in the United States, for example, varies somewhere between 0.05 to 0.07%. So we're not talking about 5 or 7% interest like you used to be able to earn. We're talking about 5/100ths of a percentage point. It's practically nothing, right? Compound interest doesn't even work in that case. It's really unfortunate. And this is how millions of Americans have their livelihoods for retirement. I think in total there's about $9 to $10 trillion in deposits in the U.S. earning 0.05% on average. So that's a major issue. And at the same time, banks are walking away. If you look at their quarterly statements, it's public information. They're making 15, 20, 25, 30% on a quarterly basis. So what's going on here? There's a margin in between the revenue that they generate from borrowers that they're not paying out to depositors. They're paying it to the shareholders. So this is a major problem that needs to be resolved. And we started to solve this through our integrated partners and technology that we offer in Digifox. The second thing as well that we want to work on solving long term is removing the need for debit card providers. So the four major card giants in the world, Visa, MasterCard, Discover, and American Express, they cost the global economy on an annualized basis over $600 billion. And people all would wonder, where does that cost come from? It comes every time you swipe your debit card. You don't see it because the cost is baked into the goods or services that you're buying. But when you're going to the grocery store and you're buying, say, $100 worth of groceries, Visa, for example, is probably charging anywhere from a 2 to 2.5% fee plus some additional change for base transfer cost. And that's revenue that they're basically generating from extracting wealth from the everyday common man, making things more expensive. So this is a major inefficiency. It's $600 billion being sucked out every single year that should be back in the hands of consumers or going back into the hands of small business owners or more large-scale businesses. And the third thing that really, at the end of the day, is something I'm very passionate about is being able to allow for money to move like a message or any other piece of data on the web. We nowadays, I can, for example, Eugene, you and I, we can send files back and forth on Slack. We can send messages or audio recordings to do calls over Telegram and over our phones. And at the same time, money moves in a much more friction-based environment through outdated banking payment rails. And this, again, on top of the debit card fees, is costing the economy even more. But most importantly, it's costing opportunity and time. Right? This really restricts you and I from being able to access all the financial services we want. And I think that that's not only it's a regulatory discussion, but it's more importantly a technology discussion. And where do we want money to be in the long run? And my bottom line to this is that I want credit or money to be able to flow like a message on the web. So if I wanted to lend money to you to go to school or to start a business, or I wanted to lend out to thousands of people who I'll never get to meet but are going out and doing something I support, and maybe I have an opportunity to make money doing it, I want to be able to do that. I want to be able to invest and lend in the things I want. And I believe everyone should do that, because when people have peak financial freedom, it's going to encompass so much opportunity across the world for people especially who need it in countries where there just isn't that infrastructure. So I think a lot of people will leapfrog the existing infrastructure that's here today towards those new systems, like we've seen with a lot of innovative technology.
So let's go back to your point number 2 about banking issues, removing debit card providers because they cost so much, but we don't even notice that. Doesn't Bitcoin and Ethereum, don't they have high gas fees? And so there's also a cost there.
It's a very good point. Yeah, so whether you're comparing it against wire transfers or debit card fees, crypto does come at a cost. So what I think you're going to find here in regards to how crypto can be the solution, what that's referring to, and to your point, Eugene, you're referring to layer 1 kind of transactions. So if I want to send Bitcoin from my wallet to yours, or I want to send Ethereum or an altcoin like maybe USDC, if I want to send that to your address on layer 1, it's going to be really expensive because there's a limited amount of block space or transaction capacity for the network. So what I think we're going to see, and a lot of people are already working on this, is layer 2 solutions built on top of the layer 1 for these networks that can basically utilize technologies like roll-ups, all these kind of fancy terminologies to be able to add more transaction capacity on layer 2 and secure it through layer 1. So there are some solutions today where I could send, for example, any amount of money. It could be $50, it could be $5, it could be 5 million on a layer 2 wallet to your layer 2 wallet. And I only pay probably a couple cents, maybe $1 if I wanted to swap from one cryptocurrency to another on layer 2. There are some that are as cheap as a couple pennies, but some that could be as much as $2 or $3 for a swap. So I think it's these layer 2 solutions that are going to be the solution to that in the long run.
And for someone who has never used layer 2 solutions before and only knows that Ethereum has high gas fees, I'm asking for a friend. How would you get into using layer 2 solutions? What websites or protocols could you look up?
Yeah, so there's a lot of really good sources, specifically in the Ethereum community. And of course, there's other layer 1 protocols. But for the layer 2 scene, there's a lot of resources. I would say like the Daily Gwei, which is a written article from Anthony Sassano, who's a pretty big guy in the Ethereum space. And he's an absolute lover of Ethereum. So he has a lot of information there. Outside of that as well, I think there's layer 2 fees as a website, and you can start to see what the cost is on different various layer 2s that are established. So that'll point you in the direction of learning about Optimism. Optimism is one of the major players. There's also ZK Sync. There's Polygon, which is a sidechain solution that allows you to have really cheap fees on Ethereum and access deep liquidity for trades. So there's all types of different solutions out there, but those are some names that I would recommend people explore. Arbitrum is another one as well. But a lot of these players are really starting to see significant adoption, and it's taking a lot of the load off of layer 1. But it's going to be a transitionary thing. It's going to take time for this to actually materialize and get more people and more money onto layer 2s.
Gotcha. Banks don't seem to consider crypto and fintech and Bitcoin as a threat to their position yet. Like Celsius, and Digifox got Celsius and Digifox. We give people 3 to 7% interest on their deposits, and on Celsius you can actually loan out. You can take out loans using your Bitcoin crypto and crypto as collateral. I think that that's a direct threat to banks and their apparent monopoly over trust in finances. Why do you think that they haven't really taken the threat that crypto and Bitcoin poses seriously?
Yeah, I think it's two things. One, I always like to talk about the topic of dinosaur companies, and it's not meant to insult banks specifically. I know it sounds like a very biased remark, but look, banks are, whether we like them or not, banks are incredibly important to the economy. They do a very important function, which is basically taking deposit reserves and basically go about the creation of new money. They create credit in the economy. And that's a very important thing to stimulate growth in the economy. If we didn't have that, GDP would be practically flat, right? So this is a very important, role that banks play. Unfortunately, what they've gotten caught into is this game of just basically propping up consumer credit. This is a broader economics discussion we could talk about later, but it's something that economists like Richard Werner, for example, talk about, where we're not focusing on doing productive loans, etc. But I digress. They serve a purpose in the economy, and I think they got very comfortable with their position of just facilitating loans. This is a very important sector of the economy, so there's no reason for them to really pivot or take on a new risky space like crypto. On the other hand, even though they still hold market share and that's going to get eaten up by crypto in the long run, I think that what most companies do, and I've learned this as I've spent time in Europe, but I've seen the same in the US when I've talked to my contacts in the banking sector. The general role of these banks, they're so large nowadays, they've all consolidated so much that they'd rather just spend a couple $1 billion here acquiring that fintech company or acquiring that crypto startup. And they're almost in that comfortable position that, hey, we're either going to ride this out for the next couple of years where our services are still relevant, or B, we're going to go acquire one of these companies. I think the third option that they're seeing now is that they've got to get in the game themselves. And we've seen now in Germany, for example, they have some of the most liberal laws when it comes to banks being custodians of crypto, offering crypto services. So I think you'll see more of that. I think you'll see a lot of them start to tap into a lot of the existing APIs and services that are offered by crypto service providers at the moment.
And which jurisdictions do you think have done a good job of regulating crypto? Because I think that's probably going to be one of the biggest hurdles that there will be for mass crypto adoption. It'll be people at the SEC or their equivalents in countries worldwide saying, no, this could put people's money at risk. We don't want this, blah, 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 blah. So what do you think are some places that have regulated crypto in a positive way?
You know, a lot of people, when asked that question, would say a place like Switzerland, or they'll say Singapore. And these are kind of jurisdictions or homes where people can set up their entities for companies or projects. And all the while, that's incredibly important. I think the markets that have actually done really well, and this might be a bit of a shocking answer, is Germany, as we talked about before, in Europe. They're really paving the way for European users. But I'd even say the US has actually done a pretty good job. I'm a little bit biased. I'm from the U.S. in this case, so I know the U.S. loves to talk about how great it is. But in all seriousness, I really think the United States and even all the regulators, the CFTC, the SEC, I think a lot of them actually have done a pretty good job. And the reason why is they've allowed a lot of projects to actually go about raising capital. They've allowed many projects to actually innovate, like Ethereum, to go out and actually build these major ecosystems and to allow for investors to participate in these markets. I think the only area they've fallen short is by supporting more financial products like exchange-traded funds or ETFs. This has been the big topic of discussion. And even as well, some of the hot negotiations and debates around stablecoins. These are some of the areas where I think they've kind of failed, or at least they're trying to regulate something in a means which doesn't make sense. But I think overall, they've been pretty pro-crypto in letting these markets establish, exchanges being built, so long as they follow the standard process that any other market would have to follow. But I think Germany is a highlight, in my opinion. I don't think it gets talked about enough. Germany has very favorable tax and regulatory environments for crypto in general, but they've really been encouraging banks to get into this sector because they know a lot of their economy is based around finance. If you go to Frankfurt, you've got Commerzbank, you've got all the major banks, Deutsche Bank in Germany, and if they don't maintain dominance over this sector, that economic capital there for Germany is going to go somewhere else. So that's, again, I think it's not only a selfish thing for them in this case, which is good. They got to maintain growth in their economy, but outside of that, it's a very favorable space for businesses and innovation.
Gotcha. Before we move on to another topic, I just wanted to quickly go through something you just said, which was that banks are important to the economy because they create credit. They create money in the system by giving out loans. If we didn't have this, then GDP would plummet, perhaps even going to zero. This is only made possible, I think, if you have a fiat standard, because that allows you to increase the money supply more than the total amount of currency that you actually have, if that makes sense. But if we were to move on to a Bitcoin standard, if governments were to hold Bitcoin as their reserve asset as well as banks, then would that still be possible? Would it still be possible for banks to give out loans and thus create that credit on which our modern economy is built? Wouldn't GDP plummet to zero?
That's a great question. And maybe I exaggerate a little. GDP, gross domestic product, it could still continue to grow to some degree. I would just say that in a system where you can create that credit from, again, a central bank, absolutely the numbers are going to generally be higher. But you brought up a good point, which is what happens when central banks start holding Bitcoin on their balance sheets and Bitcoin starts becoming this major asset? Could we still live in a world where there are fiat currencies? And I say absolutely. Fiat currencies, albeit we know they're flawed in many regards, it doesn't matter what label you put on it or what country it's tied to. Some are stronger than others. They're all the same technology. And central banks historically mismanage fiat currencies and lead them to their inevitable death, right? Where a new currency comes in. So I think that it's not a matter of one or the other. I think they'll both exist. But what you'll see continuously over time is people are going to move more towards a system where crypto is kind of the gold standard, similar to what U.S. treasuries are today. They're kind of what's used in models like the Sharper ratio. They're seen as the safest asset in the world alongside the dollar, right? Even though these are inflationary, they can make new treasury notes. So I think that Bitcoin will replace government bonds as the safest asset to turn to in the next coming decades and kind of serve as this global reserve currency. And then from there, you'll be able to utilize that as the backbone either for newly issued fiat, or, for example, you could take out loans on top of that existing collateral. But there will still always have to be loans where I have no money and you're giving me a loan in this case, and you feel I'm creditworthy enough to have no collateral, no protection, and I'm just going to pay you back at some date. And you know the cost of that credit or the loan, because out of the 100 people you're lending to, 5 of us will default, and the people who do pay back will pay some form of interest to cover for those defaults.
So you think that if Bitcoin were to gain prominence as a reserve asset, that fiat would also play an important role? It wouldn't just inflate itself to death and then everyone would switch over to a Bitcoin standard.
Yeah, I mean, there will be hyperinflationary periods on some currencies. We've seen this like in Latin America and Venezuela and a couple other regions that were kind of the easy targets to spot early on for this issue. It's unfortunate because it ruins people. But look, no matter what inflationary currencies do, the one narrative I do agree with the Bitcoin and crypto community is Bitcoin's always going to be here, and it's just going to continue to be more and more relevant in the world as time progresses. But to that point, yeah, I actually, where I would disagree with most people or a lot of the kind of hardcore Bitcoiners is they say, death to fiat currencies, they're never going to be here in the next 100 years. And I don't think that's entirely true. I don't think governments are going to give up that easy just yet. And outside of that, credit does serve a purpose, whether it's a central bank that's issuing this money or local, state governments, countries themselves. I think the idea of the government or some kind of body having the ability to print money is going to be around for a while. And it's important, at least for banks, to still be able to go out and create loans in the economy in order to stimulate growth. But it's good if they do it for productive purposes like businesses, etc.
Right. And they don't give loans to people to buy 5 houses when they can't even afford one.
Yeah, like a 25,
a couple of decades ago,
Yeah, 25, 30% APY credit cards that they know most people aren't going to pay back, and then drown themselves in debt and then pay back. It's a terrible system. It doesn't build a productive economy, but that's the world we live in today. And that's why I think GDP in a lot of the countries in the West has generally stalled or has been generally low single digit growth over the past couple of years.
Let's move on to the rise of crypto as an asset class. Do you think that Bitcoin and other cryptocurrencies will continue to grow? And is there a point where Bitcoin will stop growing, where it'll max out at 500,000 US or something like that?
That's a great question. Yeah. I think in the short term, like we're in a bull market right now for crypto, prices are near all-time highs. I think right now we're at a $2.5 trillion valuation for the entire market. And I've called for this cycle, we're going to go to a 10 trillion market cap. And I think that within the next decade or next decade or two, we can go to $100 trillion easily. And I know this sounds crazy. People are like, how could we more than 40x the market value in the next 10, 20 years? And the reason for it is because of two things. One, central banks have shown no signs of cutting down or like increasing interest rates, stopping the printing of new money. So inflation, like we're seeing it now, it's probably going to persist for a while, and that's going to inflate asset prices. But the second thing as well is we need to think about really when you're investing in assets, think about markets of scale. So you can invest in the stock market today, but in order for the entire equity market, which is around $120 trillion of wealth, in order for that to double, we need to basically increase the value of stocks by $120 billion, or sorry, $120 trillion to make it a $240 trillion market. Then you have the commodities market, gold and silver. There's other commodities, but really the precious metals, that's around a $14 trillion market cap. That would need to go to $28 trillion in market value for a doubling in price. You can take the bond market. Bond market is easily $120 trillion globally, similar to equities. That's going to need to double to $240 trillion. So the question I always ask people is like, even though Bitcoin looks expensive because the price is high and there's a limited supply of 21 million coins, which market is more likely to double or 10x over the next couple of years? And I think crypto by far has that growth potential. Because again, to that point, if we think about all other assets in the world, you think about stocks, you think about currencies, bonds, everything is inflationary. You can always make more of it, and there's no predictive amount or a kind of way to quantify how much supply there's going to be. Tesla diluted its shares multiple times to keep continuing to self-fund, even after they went public. Governments can always issue new treasuries. They can always print new currencies to the central bank. And then also people would say, what about gold and silver? Well, gold and silver are limited to some degree. They're commodities that need to be, dug up, refined, and processed. But gold has an annual inflation rate or increase in the supply that's circulating in markets of about 2% every year. So that's been historically annualized over the last couple of decades. So that's pretty much on par with what the Fed's stating inflation is. We need something that gives us a fixed deflationary and finite supply of 21 million coins. And that's exactly what Bitcoin does. And I think as well Ethereum and a couple other protocols do very well, which is having that limitation that's programmed in.
So I can understand why something like stocks or bonds or gold or oil would not be able to double or 10x in a couple of years. I can see the point that you're making, which is that crypto is most likely to do that. But why do you think crypto is most likely to double there? Where does the increase in value come from?
The increase in value is the predictability of the supply. So back to that point again, I think that's actually a fair point, Eugene, because that's true. I was hitting more on like the potential markets of scale. I think the biggest reason is that as time progresses, and we're seeing the network effect growth of crypto, even though it's not a commodity you can use, similar to paper money, stocks, everything, people see value in whatever they see value in. For crypto, I think the predictability of its finite supply is the biggest. And the reason why is that I know that generally, no matter what central banks do, what governments do in the sense of issuing bonds, no matter if the company I'm investing in, right, or might invest in, is issuing new shares and diluting the company, I know that Bitcoin can't be diluted any more than the programmed functionality that it has on the network that's pre-coded into the network. It's the consensus that every one of the networks participating in. So that when I own one Bitcoin, I'm always going to own 1/21 millionth of the network. And I think that for investors, like the first time in history we have a finite asset, that's an incredibly powerful thing in an inflationary world. So again, not really, and again, this is one thing that, again, it's an internal debate that's always going on between people like myself. I was originally like a big gold bug when I was learning about the banking system. And I think it's important to keep those assets in mind for your investment portfolio. But people say gold's like a real commodity that people utilize for industrial uses, and therefore Bitcoin's worthless. But the reality is 90% of gold is locked up in either jewelry that people are wearing, not an industrial use case, or it's locked up in central bank or private bank vaults across the world. So really only 10% is utilized for industrial use cases. So I think we've seen now that the vast majority of gold's value and why it's like a $12, $13 trillion market is because it's limited to some degree and people have time tested it as a store of value. I think that Bitcoin is going to exponentially grow past that because of its clear finality and the supply schedule. And that's just huge for investors when it comes to uncertainty of geopolitics and monetary policy.
Gotcha. So Bitcoin's main value then sounds like it comes from its scarcity, which acts like it's deflationary, as well as the network effects where more people are getting interested in it, want to have some for their own, and it'll start to catch like a wildfire. And that is its value, its primary value. It's the network effect.
Exactly. Yeah. Like all technologies, like the internet and everything, Bitcoin needs to scale towards not only hundreds of millions, but eventually billions of people. And the way I think about it, people sometimes ask, is crypto growing fast enough? The metrics on where we are within the total amount of users who own crypto or have engaged in crypto to some degree probably stands somewhere around like 2% of the world now has engaged with crypto in some fashion. So we're really still in the early days. Like we're in the equivalent of the 1990s for the internet. And what you can see is still to this day, surprisingly enough, the internet is still only penetrated, I think, 55-60% adoption, globally speaking. So the internet's still got a ways to go. And we've seen just how incredible of an impact it's had on the world. Think about what crypto could go to when it's at a 2% adoption level to 30-50%. I'm really excited to see that future.
I want to ask a juicy question. What are the fastest ways to exit using crypto?
So basically, just so I understand, Eugene, basically like if, let's say, for example, you invested in crypto, like how to sell it in this case, or like...
No, like I'm talking about how do you get super rich super quickly using crypto? If you wanted to do that, if you wanted an exit, how would you use crypto to do that?
Yeah, so it's incredible. People always want to find like an overnight way to make money, and unfortunately, even in crypto, where there are lots of ways to make money quickly, they're very high risk. So I generally try to stay away from promoting that. But if your time frame, like to get rich pretty quick, I would say if you can make it in like a year or two and like retire, like set up for retirement, that's awesome, right? So the biggest thing, what I would tell people to focus on is to trade the cycles. So Bitcoin, like other markets, goes through bull markets and bear markets. And my whole focus when I go about investing in crypto is I'm not technically just putting in money and holding it there forever. What I'm doing is I buy as much as possible when we go through the typical 80% pullbacks in Bitcoin's price that we've seen historically. And from that point on, I'm continuing to accumulate or build positions, investing as well into altcoins and more speculative plays that might outpace Bitcoin during the bull market. And then once we get more towards the euphoric tops of the market, start to take my chips off the table. I start cashing back out. And that's really the best way to go about trading or investing in crypto. If you learn how to do cycle analysis, if you can take that time to invest in it and generally know when to spot market bottoms and market tops over a year and a half, 2 year, multi-year time frame, that is going to be your best way to making money in crypto. And the great thing is you don't have to sweat about it. You don't have to watch the charts every day, and just basically continue to dollar cost average in those different plays. In the sense of like how to get it there quicker, some ways you can amplify that are earning interest on your assets. So that's one way. You also can use your crypto as collateral to borrow more, but I only recommend doing that once you've gone through an 80% correction. I think the vast majority of people don't understand the risk of borrowing with crypto collateral to buy more crypto, which is effectively leverage trading in a sense. So I generally advise from that.
And to be clear, this is not financial advice, anybody.
Yes.
This is just for educational purposes. The risks that you take on when investing in crypto are yours and yours alone. Please be very careful. How do you pick which altcoins to invest in? Are there any fundamentals that you use?
Yeah, so generally, like I take a lot of what I learned from back when I did equity investing, which is I like to invest or trade in like early stage momentum driven sectors that like really are on the cusp of like getting some recognition and adoption. And I would say two sectors that have really excited me in this cycle. I really, since the bottom of the bear market, was talking about decentralized finance or DeFi. This is one of the biggest and most established kind of use cases in crypto, outside of crypto being a store of value. So like a finite supply currency that could replace traditional government currencies or commodities like gold and silver. DeFi is aimed at providing decentralized financial services. So people always ask, okay, what really makes something DeFi? And there's all types of different opinions on this. My opinion is that a DeFi application is a permissionless service that's available through what's known as Web3, basically through the internet that I can access, and I'd be able to engage in that service without anyone's permission, right? It's plug and play, anyone can access it, and it's a financial service you might be familiar with, swapping from one asset to another, making a trade or a swap, but also as well depositing it into a protocol where it thereby can be lent out to people, earning yield and interest that I get back as a depositor. So we talked about banks, for example, and the issue and inefficiency they have. They're sending all the payments over in dividends to their shareholders. Why is it that me, the depositor, who's making up the bank, why am I not receiving 90% of the yield potential, right? So that's the whole idea, is that you can start to get yield depositing assets in protocols. You can start to make trades, all kinds of different things. And I would even beg to say that payments as well play into DeFi long term. So there's all kinds of financial services. That's one of the biggest trends. And I'm really excited about investing in that sector. And the second one would be potentially the gaming sector in crypto and the broader term of the metaverse. This general idea of a separate technological world where we're going to work, we're going to communicate together, collaborate together, and build really awesome experiences. Those are two of the broader sectors. So I find those macro trends, and I try to invest in the players who have been fundamentally building in those sectors way before the trend was being talked about, that have established projects that are actually doing real things and that people are actually getting excited about. Is there a network effect? Are developers building on these protocols and services? So those are the kind of things that I would look for.
Gotcha. Okay. Is there a Warren Buffett of cryptocurrency value investing that you can point out?
I don't think we've found our Warren Buffett yet in the space. I think, unfortunately, there's too many people in crypto who would see themselves as the Warren Buffett of crypto or the Wolf of Wall Street of crypto. I would say this, there's a lot of great fundamental people you can follow out there. I would say to follow YouTubers, people on Twitter who are entrenched in the fields that you find interesting. I don't think, like even Warren Buffett, for example, one thing that I always point out, not as a criticism, but an important thing to know about, Warren knows what he knows, right? He's very good at finding fundamental value companies that, basically have good financials and are generally traditional kind of blue collar industries, right? Industry, major consumer cyclical goods, right? And that's where he sticks to. He didn't invest in Amazon. He didn't invest in a lot of tech. So what I do is I follow a lot of really admirable people. I think one person I would recommend in regards to the kind of innovation side for DeFi, there's a couple people I would recommend. There's a guy named, he goes by Kane. He was the founder of Synthetics Protocol, which is a crypto protocol in the DeFi space. Outside of that as well, for DeFi, there's people like Stani Klobuchar, who basically created Aave protocol. It's the largest deposit protocol where you can actually earn interest on your assets. And then there's Hayden Adams, who is the creator of Uniswap, which is the largest automated market maker or decentralized exchange in the crypto space, the biggest DeFi app by far. So those are all some people that I would recommend looking into, learning about their journeys. And then I would say from there, follow people who are covering their stories and other stories like theirs, the success stories in DeFi, and covering emerging plays in the space.
Gotcha. Okay. How do you hedge against Bitcoin or crypto failing? Like, I think one threat, for example, would be quantum computing, which might make it super easy for people to compute transactions and maybe hack into stuff.
Yeah, I mean, no matter what the threat may be for crypto or like any potential like black swan event that would like obliterate the crypto market, I would say general diversification to other assets. No matter what asset has an issue, let's say that something really bad happened in the stock market, or people just decided to stop investing in stocks, or they wanted to stop investing in crypto. Any asset that falls and like crashes to zero is going to hit all other assets temporarily. Most likely, people are going to rush back into currencies at the start. And we saw that back in March of 2020 during the pandemic. But for crypto more specifically, the solution is really just to hedge yourself in other assets. So to have exposure to equities, have some cash always in reserve. I know a lot of people are like, ditch fiat. I would always have a little bit of fiat currency. I don't think there's anything wrong with that. Have gold and silver if you want. The more diversification you can have, the more protected you'll be and the more layers of protection you have. But at the same time, the more you diversify away from assets like crypto, we have to understand as well that the returns, the annualized return, is going to decrease. And I find that the sweet spot is having that 20-30% allocation to crypto. Like if you're a little bit more in the know, the average everyday person, I'd recommend like 10-15%. But again, that healthy allocation hedges you in the case of hyperinflation, in the case of depreciating dollar, and helps you to outpace other investments. But along with that as well, you have a portfolio of stocks, you'd have some cash, you'd have some gold and silver, some bonds, and that gets you in a position where you can outpace inflation and actually grow your money in the long run and prepare for your future.
All right. What industries do you think crypto, and not just Bitcoin, but also Web3, things that are built on the blockchain, what industries do you think that this entire new class of assets threatens?
We've covered a lot of the big ones, like the store of value, like wealth and store of value. We talked about DeFi. I think the metaverse, as we talked about earlier, is going to be a big one. I have to say, though, all the while there are some other sectors. I think maybe enterprise services could start to be a little bit disrupted as well. So I worked with a project called Unibright for the past couple of years that's aiming to build a variety of enterprise-grade services. One of them, new protocol they're working on called Base Ledger. And what they're doing is basically building an entire kind of set of DeFi services, if you will, on top of existing layer ones. and being able to actually communicate invoices and charges, all types of different services that businesses might interact with on one another on top of this new protocol. So I think that there's a lot of like niche areas, but the biggest one is DeFi. You know, I keep coming back every time I hear these trends. There's NFTs, there's all this stuff. I always come back front and center to DeFi, and the reason why it rekindled my interest in crypto is because we talked about earlier, there's all this inefficiency in traditional finance. There's that $1 trillion of estimated inefficiency, probably even more if we talk about all the missed opportunities where people aren't able to get access to a loan, they're not able to receive payments, they're not able to invest and do business elsewhere in the world. If you can remove those inefficiencies with Web3 and DeFi, the world is going to be a much better place. It will transform human life just as much as the internet, in my opinion. But it's going to take a decade, 2 decades for us to really get there in order to really materialize that.
Gotcha. Okay, and before I move on to renewables, I wanted to ask you about something you said a lot earlier in the conversation, which was something about microloans. That's an interesting topic to talk about. What is the potential that crypto has for giving out microloans in countries that may not usually have access to banking services and things like that?
Yeah. You know, when we talk about like microfinancing, the idea is generally that like in that example you were talking about, we were discussing earlier, Eugene, like let's say, for example, you were a student in this case and I wanted to lend money out to you to go to school and I wanted to help finance it. And maybe I'll get the money back and I get 5% interest annually until the full loan's paid back. Right? That's really cool. But the thing about that, in the sense of how the user experience is probably going to look, I think what it'll be like is like a traditional bank account where you deposit money, but instead of that money just going out to local businesses in your area, it can flow into anything you want. It can even, in fact, support things that you really resonate with. So maybe you really care about environmental initiatives. Maybe you want to lend, basically earn interest and know that your money is going to supporting renewable projects. It could be going towards educational loans for people across the world. So the original idea of microfinancing is you pick small, kind of almost in a sense, peer-to-peer loans, if you will, where I'm lending out $200 to someone in Nigeria. But what we could eventually get to is where I just deposit $10,000 into a protocol or some kind of savings account, if you will, and that money gets dispersed amongst so many people and that money moves freely across the world. That's the kind of future that I want to live in, where it's like the internet, where it doesn't matter what country you're in, I can communicate with you and I can transfer value. So that's the world I want to live in and what we want to work towards. But microfinancing is incredibly powerful. A platform I recommend people check out is kiva.org. For example, each month I put in $2,000 into Kiva. And what this does is it immediately lends out my $2,000 to various borrowers. And I have it set where once they repay me back for my loans, it's about a 98-99% repayment rate. There's no interest, but I just continue to re-lend it. So I'm continuously trying to lend out more and more and help people pay for their school, to be able to progress in education, start a small business. It's one of the best ways you can leave an impact on the world, much better than just a one-off charity donation, in my opinion.
That's a great point. What draws you as an investor to renewable energy?
It's where I got started when I was doing stock investing. It was the first sector that I saw that, whether it was that day I was investing or 10 years later, this was going to be a hockey stick kind of S-curve level of growth. And solar has hit that chasm where cost of, when we talk about solar, we're talking about photovoltaic cells, so the blue solar cells that people are commonly seeing when they hear about solar. The cost of photovoltaic cells are dropping. The adoption curve is going up at a near exponential rate. And for me, I like to find these sectors right as they're about to see the S-curve, because the growth already is great. But when you start to really see technology adopt, that growth starts to again hit the S-curve and start to scale. I think solar, putting aside even any moral arguments, I think overall, it's just exciting. Like a transformation in the energy grid is something that I love. I love real industry, real physical innovation. So much of the world is in software. And that's really cool. Software can remove inefficiencies and make us work more productively. But I think that when there are these major transformations in the entire infrastructure of a global economy, especially energy, that's a $1 trillion plus opportunity. annually in this case to basically shift capital flow into companies that are working in the solar sector. So there's a big potential, I think, to make money. And outside of that as well, to really like invest in something you can believe in. Solar is not a perfect technology, and I know we've talked about Eugene and stuff like that. Also my interest in nuclear and a couple other energy sectors as well. But I think it's a cool opportunity to get to invest in something where you can hopefully make life-changing returns, and it's investing in something that's going to better the world. For me, it's more about just in general reducing emissions so that we have a generally cleaner environment and stuff. But I know it's a solar and generally renewables can be a hot button topic, but I think generally I think it's a win-win no matter what. You have a more sustainable grid, energy independence, etc.
One topic that I recently learned of when listening to Balaji Srinivasan go on Tim Ferriss was the idea that you could use Bitcoin mining as a battery, which completely blew my mind. What potential, Bitcoin mining has a bad reputation for killing the world and taking up a lot of energy, but do you think that Bitcoin mining could be used as a form of battery, or could it help renewable energy production?
Yeah, I have to look more into Balaji's point on that and stuff. Like he's a really cool guy. In regards to this kind of topic of Bitcoin being used as like a battery or storage of electricity in a sense, I think effectively I need to dive into his opinion more before I can really have a confident opinion on it. But I've heard this argument used a lot and stuff, and it's this idea that you can basically mine Bitcoin with unused electricity, and that can not only help to stabilize energy prices, which is really exciting. You can have more stability and usage of energy that would just generally go to waste. But outside of that as well, you have monetary value in this case, these Bitcoins that you've mined, you've done some productive with it, and that can help to basically funnel expenses for for energy, for other expenses, right? And you can feed back into the grid. There's various different viewpoints on it. I would say generally that it's an overall net positive because it's usually going to be utilizing unused energy, the cheapest energy source. Miners who are mining Bitcoin are always going to go for the cheapest electricity source. So I think that that's where most people are going to go to, and it's going to be utilizing mainly renewables. Renewables end up being the cheapest long-term investment in energy. Solar voltaic cells are incredibly cheap. So I think that that's generally what you're seeing. And I can agree with the narrative to some degree. It's not perfect, though. The only reason I would say why proof of work is not 100% perfect, or mining for Bitcoin is maybe not a sustainable model in like the next coming decades, is because proof of work doesn't scale. Let's say you double the amount of hash rate or power or energy that's going into it. It quote unquote maybe doubles the security to some degree, but it doesn't double the throughput. It doesn't double the amount of transactions you can do on Bitcoin. And I think that that's a major setback with proof of work long term, unlike proof of stake where you can do sharding and you can start to fractionalize the chain. I think that that's a big limitation. And I would just hate to see a lot of computational resources going into that long term if we don't find a way to scale out layer one even more.
Gotcha. I want to ask you a question. Earlier in the conversation, I asked you how you started Digifox and why you started Digifox, and we never really got to the heart of it. And now I want to ask you about that. Just to wrap that up. So you were investing in equities. You noticed that there were a lot of inefficiencies in the banking system. Everyone has noticed inefficiencies in their lives. What then pushed you to start your own company?
Yeah, what was the ultimatum? I think it's a bit. I don't want to be too melodramatic or anything on it, but I think for me, when I get really reflective on life, I think that no matter what happens after we die, we get one shot at this, right? And if we're so fortunate, like you and I, Eugene, we live in the West and stuff, we're so fortunate to be able to be where we are and have the resources we have and the opportunity. When the YouTube channel had really kicked off, I saw it as kind of like a grand opportunity to be able to kind of go out there and put my drop in the bucket to see if I could leave an impact on the world. You can make a good amount of money, you can retire, that's fine. But for me, it kills me to see inefficiency in the world because I'll put it this way. It's a very metaphor, like a very visual way, and maybe a bit kind of weird. So I'm very self-aware of this. But When I think of those 4 debit card providers that cost the global economy $600 billion, to me, I know that will cost lives. At the end of the day, it's going to lead people to not be able to cover medical expenses, go do the things they want to do, because we're really viewing things on a macro scale, right? This hidden cost and inefficiency absolutely crushes dreams and hopes. If I can't lend money to someone in a foreign country that I may not know who they are, but I want to lend it to them, unfortunately I can't because the regulatory or technological limitations, they may never go to school and better their lives. And that can set them back and change the course of their lives forever, right? So we have major ramifications from this outdated financial system. And again, I know it's hard to really visualize it, unfortunately, but these are the things that, to be completely frank, they keep me up at night. I don't care so much about how I'm going to do well for myself. I think you get to a point where you're like, okay, I've done good for myself. I can live with my means. I'm a very simple person. How can we go out there and completely remove inefficiencies? So I hope to do that in finance. That's the biggest inefficiency when it comes to any of the major sectors of the economy. And then after that, it's on towards working towards building better energy infrastructure, removing inefficiency from other sectors of the world. That's, for me, my drive, is making things more efficient so we can have a more prosperous world. I want everyone to live like how we were able to live. And I think that that's possible. I don't think it's... people shouldn't be limited by the borders that they're born in, basically. And of course, there is always going to be inefficiencies or problems in the world, but technology has obviously proven it can build a better world. It's got us connected now from various countries of the world, so I'm very happy about that, and I'm a better person for it.
Right. So you started Digifox because you wanted to try and fix these inefficiencies, and you wanted to give access to finance to people all over the world.
Absolutely. I honestly, again, not to be too melodramatic, I felt an obligation to do it. If you have the money, the resources, and you have, not to mention, most importantly for a startup, you have the attention in this case through a YouTube channel like I have. I just felt it was my obligation to do it. And for me, it's a really fun challenge. What's life if there's not a challenge to work towards? I think that's, you want to not only have that mindset to maintain happiness, but also surround yourself with people like that. I have found, whether it was when I had no passions in life or the time period when I did have passions, the thing that always kept me incredibly happy is thinking about how can I improve other people's lives. And I don't think I've gotten to a point where I can say too much. So it's not trying to put myself on a pedestal or anything, but I want to work towards there. And I hope to leave that impact in the world where, you can be remembered for something.
Fair enough. You mentioned Ron Paul being a big mind blower influence. Who are some other people or books that have made a big influence on you?
Yes, I can name a couple books that'd be really good. Some of them, towards this point of helping to change the world. One really good book that I recommend people read that really opens up your eyes to the problems that the U.S. caused for a lot of developing countries across the world, but also maybe where crypto could come in to solve a lot of it, is The New Confessions of an Economic Hitman. One of my favorite reads, really opened my eyes up to the traditional banking regulatory world of the IMF and the World Bank, and how that set back countries for many years. That's just a really macroeconomic, it really gets you in a global perspective, thinking about the world economy. Outside of that as well, for books that I would recommend, I've actually got a couple here on my shelf. They're not all my favorite books. I always would say to become a healthy skeptic, read 1984, read Brave New World. But at the same time, outside of that as well, I've got a couple different books here that I think generally tap into the broader world of finance. I'm trying to think of any other ones. I think one that's really good as well, I can't think of the author, but it's The History of Money. The History of Money basically covers how we went from traditional, first, even before money was made, how cultures worked before there was money, and the evolutionary steps of money. And I think that helps to cement understanding crypto's place. It's not just some new fad or technology. It's a new technology of value transfer. And we get one of these, historically it's been getting faster and faster, but we usually only get these every couple of decades or centuries. So it's a very rare opportunity, and therefore a potential investment opportunity to catch it early on. I would say, in the sense of people who moved me, there's a lot of people. I would say one economist that I would recommend checking out is Richard Werner, who we talked about earlier. I really like the work he's done in Europe and pushing for localized smaller banks and also for productive credit creation. He's a very important person. He was the one who created actually the term quantitative easing that Ben Bernanke initiated in the US. And even though quantitative easing has a bad name or kind of bad rap, it's important to understand what it did for the banking system and what Richard Warner also sees that Ben Bernanke and many central bankers missed on, which is that banks with this new base of money supply that has to be lent out for productive purposes. So I highly recommend checking him out as well.
Awesome. Thank you. And before I ask you how people can reach you, do you have any last thoughts that you wanted to share?
No, I mean, honestly, I think, the general theme I guess we talked about is crypto and what kind of room for innovation there still is in the world. Two things I'll say. Have some allocation to crypto. Of course, not financial advice, but I hope I speak with my actions when I say I am to a unhealthy degree exposed to crypto, right? Because of how amazing I think this sector is. But I would say have some allocation that you feel comfortable with. Don't miss this trend. Don't worry about what the headlines are saying. And if you want to learn more, I've got my YouTube channel, Data Dash, as well as Digifox. We've got tons of educational material. I know Eugene is doing a great job of along with the rest of the team. And then the second point I would say is always keep a positive mindset. I know there's a lot of good in the world. There's a lot of bad. There's a lot of struggle. There's always something we're getting riled up about as humans, especially if you listen to the news. But I think the really cool thing is that humanity always triumphs. And when there's a new challenge, there are new technologies and opportunities not only to build and create, but to invest in. So putting your time and energy around people who want to solve those things, the companies that want to solve those solutions, whether it's investing or working at them or supporting them, you will be a better person for it. That is hands down the best advice I could give to people is surrounding yourself with people who are positive on the future and are kind of, if you're using market terminology, they're long on the future. They're bullish. They're investing in the future. They're investing in themselves to be a part of it. And I think we've seen a lot of great companies and innovations just in these past couple of years that have proven that trend. So I'm looking forward towards a better future and want to say as well, thank you, Eugene, for having me as well. It's been a pleasure.
Thanks for coming on to Letters from a Contrarian.